Quick question. What's something that most everybody has, but nobody wants? Debt. Debt elimination is always at the top of a prospect's list of financial goals. Instead of ignoring it, the RetireMax Debt Analysis tab helps a client understand the financial impact that it's having and motivate them to eliminate it as quickly as possible. The Debt Analysis tab is used to illustrate how long it's going to take to pay off certain debts, what the total cost of debt is, and the hidden tax impact. Also, if the loan feature is used with a 401k, 403b, or 457, and the employer plan document allows, it will illustrate paying off the debt through using the retirement plan loan provision at a 50% loan ratio. Cells have been pre-populated under debt information. Be sure the minimum payment entered covers the annual interest due, even though the statement may have a lower minimum payment listed. This is because if the minimum payment does not cover the annual interest, the credit card would never be paid off. The balance would actually grow. As an example, a $50 minimum monthly payment would equal $600 a year. A loan of $5,000 at 20% interest would equal $1,000 of annual interest. The minimum payment in this example would have to be increased to $84 per month to cover the $1,000 annual interest. Notice that if the $50 amount is used, the interest, taxes, and true cost cells do not populate. If $84 is inputted, those cells populate, showing $19,577 of interest and $4,337 of taxes for a total cost of $28,915. Assuming the debt interest is not tax deductible, you would have to pay taxes on the interest paid, giving you the total cost of consumer debt. If a second debt is added, notice how you can change the ranking of the debts by sliding the debt number up or down. The cash flow column illustrates the difference between the minimum payment and the approximate payment back to the retirement account. A positive number indicates the payment to the retirement account is less than the minimum payment on the debt. In the bottom section of the debt information section, a monthly number can be inputted into the retirement account line to illustrate a loan payoff. The side fund line is for a loanable lump sum amount. Only put the amount you can actually borrow in this cell from the retirement account. Let's put $500 into the retirement account cell. Under the interest header, the total interest with a minimum payment is the amount of interest projected to pay based on a minimum payment of the above listed debts. The total interest on the overpay line just below shows the amount of interest projected to pay based on a minimum overpayment of the above listed debt. The current payoff header information shows how many months it would take to pay off the particular debts. The tax-sheltered account loan payoff section shows how many months it would take to pay off the particular debt using the retirement account at a 50% loan ratio. With $500 per month going into this tax-sheltered account, it would take 24 months until enough was accumulated in the account to take a 50% loan. The side fund cell is to illustrate a current available loanable amount from a tax-sheltered account. If there were $2,000 available plus the $500 per month, it would cut the time from 24 months to 16 months. Note that many employers only allow one loan from the retirement plan at a time, meaning a second loan could not be taken out until the first loan is paid off. If a loan from the retirement account is being considered, make sure that the loan disclosure is fully disclosed and understood by the client. The Debt Detail View section illustrates the different numbers calculated if a loan for the retirement account is used to pay off the commercial debts. So, what's in it for you to help someone pay off their credit cards, cars, and boat payments? Cash flow, of course. The less we have going to Visa per month, the more we have to save. If you're wondering why 1 out of 3 have less than $5,000 saved for retirement, this is it.